Looks like it's frozen. Can you guys hear me okay? Let me know if you can hear me in the chat there. It looks frozen on mine. Let me maybe refresh this page. Nope. Okay. Guess we are moving. All right. Good morning, everybody. Welcome. Doing a little live stream here. Now, we came on to talk about the hottest stocks in the market. I'm still going to do that. We just got new CPI news in. Now, the CPI stands for the Consumer Price Index, and that's the big hot number in this market. That's where everyone is focused because the number one fear right now is not earnings. It is not the economy. It is inflation. And Biden and his White House have been humiliated by inflation so far this year. It's obviously his big priority to get that down. And he is pressuring the Fed to aggressively raise rates to do so. Now, Powell spoke at Jackson Hole a few weeks back, basically confirmed that they would be aggressive with 75-bit rate hikes coming up, which tanked the market. We began to recover from that. But today's CPI number came in a little hotter than expected. So the market was anticipating, and I'll show you this here. The market was anticipating a rate hike, a CPI growth, meaning the consumer price index, to be up 8.1%. However, it came in at 8.3%, which doesn't sound like a lot, but a lot is being bet on this news, and the Fed's actions will be dictated by it. And the result has been an absolute evisceration of stocks so far this morning. So far, we are down 125 points in the S&P 500. Dow is down in just the last hour or so, about 800 points. So it's going to be an ugly day. It's still trending lower here. Not looking good. Now, this will separate the good stocks from the weaker stocks. And you're going to see a day like today, if we get another bloodbath like we did back here on August 26th, that nasty day here where the market fell 3% and then just bam, drifted lower for the next week or so. This is going to be a big test. We're going to see if last week's low held, if we can bounce off the 50-day here. But you're looking at stocks today to see how they perform relative to the rest of the market. And this is going to be a great test of the market leaders. So I'll show you some of the big names I'm keeping an eye on right now. One of the biggest and most watched names in the market here is Enphase Energy, ticker symbol ENPH. Now, solar stocks are red hot right now. It's the number one sector of the market, followed closely by other alternative energies, biotechs, and a couple others. So solar is an area you definitely want to be focusing right now. Enphase has been a monster here. So he took a position here and it broke through this white line. But notice how we had a big base formed here, broke out nicely. It is now consolidating. Pre-market is down a bit on this news. So keep an eye on this. But you want to watch these stocks. What you're looking for is stocks that come down less than the general market. So if we get another 5 or 6% pullback in the indexes and your stock is holding up here, making new highs, that's the sign that you've got a market leader and one you want to buy into. And so this will give you a chance, like these big market leading stocks will give you a chance to buy these pullbacks to like maybe the 21-day moving average, an area I like to buy. Another one, Neurocrine Biosciences. Now, Neurocrine has been really strong, big base, nice breakout, held up by the market, but look at the volume down here. This is the footprints of institutional activity. See the big, just 1, 2, 3, 4, 5, 6 above average days on up volume. And the one little mini selling day here wasn't really bad and stayed in range. This is like the footprints of institutional buying. And that's what you want to see in the leading stocks. You see yesterday, which was Monday, the stock tested lower here. Look at this candle. Tested low and it came all the way back and closed up here at the top. That's a sign of strength. So watch this stock today. If it can still hold up and stay within Friday's or Monday's range here, even though the market's getting beaten to death, then you want to buy that one when it breaks out above where we saw yesterday. So above, call it 107, 107.5, something like that. DQ, another one, another solar name. This one really breaking down here through support this morning. So probably keep that off the list. Vertex is another one. It's a biotech stock, and you see a really clean trend line here pushing higher. So this has been a stock holding up extremely well, very clearly defined support. It's bouncing here. The stock is just barely down pre-market on this news. It's another good sign here, only down 4 or 5, bucks a share, maybe 1% or so. If it holds, it'll give you a chance to buy, maybe buy off the support level. The nice thing about these trades here, you get leading stocks, you're near support, you're buying the pullbacks, you can risk very, very little. So, for example, if you bought VRTX in here, 287, 288-ish, and then you put a stop loss just below this little low, you're only risking 3.3, 3.4%, which is almost nothing. And it's going to allow you to get more stabs at these stocks, because when you get one that works here, you're easily going to be up 7, 8, 10+% if it moves in your direction when you're only risking, 3.5. That's really the key. Keep that risk really small. Miguel said I lost $274 this morning on MNQ. Let's see. Oh, the mini. Your service, which lasts a week. I'm in on Monday, out on Friday. How do you deal with this bloodbath? I mean, I guess it's different for everybody. I wouldn't consider 274 a bloodbath for me. If you're talking about like the market and how it just dives hard like that. Using weekly options, like doing my weekly strike force service, it is a way to just cap your downside risk. So if you bought an option, a weekly option, betting on where the stock or the index is going to be on Friday, if that option was $50, $100, whatever that may be, let's say you bet on the stock to go up and then things just get eviscerated. Well, you've capped your loss. It's the most you can lose is that $50 or $100 you pay for that option. So it's, there's no way to avoid risk altogether. If there was no risk, there'd be no profit opportunity. There'd be no reward there. So we're always looking for ways to mitigate that risk and define it while leaving us open to the upside, right? We've got a couple others here. Northrop Grumman is looking really good. And this stock seems to be holding up extremely well with this news. You notice here it closed yesterday at 42.30. It's showing pre-market is still at 482. So that's right there. It hasn't come down at all. So this could be one to definitely keep an eye on. This is a pretty textbook setup for me. How it makes a big run higher, then compresses, and then just kind of shallows out here on the right side, gets really, really tight. Then you want to buy when it breaks through that resistance level. So Northrop Grumman is the big government defense contractor. Stocks set up extremely well. I mean, the fact that we've been in a bear market and the stock looks like this is pretty incredible. 200-day is not even flatlined at all. So this is one, you get up above that $500 print, you could see a nice solid move higher. Altimmune has been a big leader. It's a biotech stock making just huge moves. I mean, this thing was a $4 stock 4 months ago. Now it's $20. So this is just huge moves here. And you notice it's coming up and then basing and shallowing out, and then when it breaks out, just another big surge higher. So the same thing here. I'm looking for with Altimmune, and you could buy. I mean, depending on where it comes here, you could buy a pullback to the 21-day EMA. It's really not a bad way to go about this. You put a stop, right down here or right down here. Only, risk a little bit of money on this. See if you get a bounce. This has just been such a surging market-leading stock. I think it's worth a little bit more risk because when it runs, I mean, this thing just doubles. Keep an eye on Altimmune, one of my favorite biotechs in the market right now. ARRY, another solar stock. This one down pretty big pre-market, all the way down to 19. So this is one that's really not, that is succumbing to that weakness in the market. So not one I would really, it would move it from my primary watch list to my secondary watch list. I'm not generally buying weakness. If this thing's going to break down below, this base it's forming, if it breaks down below that, it's one I'm really not interested in until it firms up again. So I like to see these, come in, form their little base here and sort of tighten up against resistance. and then we buy when it breaks out above. That's sort of the secret to trading breakouts and find the ones with the highest probability going higher. You're working through that supply and demand. This thing, if it comes here and it starts to, instead of tightening up like this, if it starts, widening up, well, that's kind of going the wrong direction. One I'm going to take off my watch list. RYTM, this one also looking good. Had a nice, you're going to break out pretty nicely yesterday through resistance here. Obviously, this weakness is pulling it back a bit, but still holding up pretty well around this $26 mark so far pre-market. If this thing holds here, especially if it comes out and makes a new high today above where it went Friday, this would be a definite candidate for me. Another market-leading biotech stock that has gone from, call it $5 to $27 just a month. I mean, that is a monster move. And you're asking, Ross, it's already up this much. All right, well, it was already up. Here you go. Oh, this thing's up 225% in 3 weeks. I missed the move, but you didn't. It had another, 80 or so percent to go. So don't look at this and go, oh, it's already up. This is the kind of stocks you want to focus on. This is where the power is. This is where the money's flowing. This is where you want to be involved in it. So if you end up being the guy who bought the top and you take an 8 or 10% loss, I mean, so be it. But it's worth taking that risk to get into these monster power stocks that can make you 40, 50, 80% in a relatively short period of time. This was another one, AXSM, kind of fizzling here now. Canadian Solar. Yeah, this one really kind of falling apart in the solar space. Shoals, another solar stock, kind of forming a tight little base up in here. It's been leading. Transmedic, biotech. Kind of going through the stuff on my watch list here. That's important. This is a stock we bought yesterday from the Alpha Stock Service, and I sent a rec out right when the thing was breaking through here. We had a nice little gain. I mean, the stock came up, big volume, right? Jumps 7-8% in a single day, exactly what we want to see. And then, we get a nasty CPI report. Here it is pre-market all the way back down to $19.20. So really, really frustrating. Let's see what the futures are doing now. We got about 15 minutes of the market opens, and yeah, they're still falling. So trying to level out in here, but just a big, in 5 minutes, really, I bet in probably 1 minute. Yeah, about 1 minute, market went down about 100 handles here. So roughly 100 S&P points down in a minute. That's what these news events can do. It's why they schedule them pre-market, so the stocks don't all, hit circuit breakers and everything else. But that's kind of the big names I'm watching right now. Again, it remains solar, remains biotech, remains alternative energy. MNTK, the one we bought yesterday, still could be a good opportunity to buy today because it's going to pull back, give you a second chance to buy here at the breakout level around the $19 mark. And, we've got a stop in here at 1940. I'm sorry, 1775. We'll see if that holds. But, without news, just a perfect breakout. Look at the volume here. The stock does what? 3 times its average daily volume. Very clean, closes near the high. Exactly what you want to see on a breakout trade. Relative strength making a new high. So this will be the test. If a stock like this making such a strong breakout on such good volume with such high relative strength, to get a top stock in a top group making a perfect move. If that can't survive, if that does not survive this CPI print, then the bear market rolls on and we could very easily come back, revisit the lows. And that's, part of being a trader. It's unfortunate. You're going to give me the stocks that are going up. These are them. These are the best out there. These are the top leading stocks in this market. And if these cannot hold, if these are not going to run, it is simply not worth risking your money in this market. You have to be able to recognize those times when it's just, hey, I'm either looking for short trades or I'm not trading, because this is just a really poor environment. And I know that's frustrating. I know it's not what people want to hear. But the fact is there are easy dollar environments where it's just very easy to make money, where the breakouts work extremely well, where 7, 8 out of your 10 trades are working, when they trend extremely well. And there are times when we get a nasty bear market, when you get recessionary pressures, when you've got record inflation, when the Fed is raising interest rates into record inflation, when you have a president who, to be frank, sometimes doesn't know where he is. You've got it's just really, really difficult right now. And so, we're using some strategies, some weekly options, some tighter stops, some buying pullbacks, things like that to kind of tread water and make a little bit of money here and there and adjust our strategy to the volatile environment. But the reason the market's selling off hard right now is not because people realize inflation's 8.3 instead of 8.1. It's because they know what that means for the Federal Reserve. And they know the Federal Reserve is now going to be even more aggressive on those interest rates, which means they were already kind of pricing in a 0.75% rate hike next week. Could be as crazy as a full 1 point, a full 100 basis points, which I don't even know the last time that happened. It's been decades. And of course, rising interest rates are generally bad for stocks because the higher rates are, the tighter the economy is, and the higher the earnings yield needs to be on that stock. So the price of that stock needs to come down to make it more attractive versus fixed income and bonds and things like that. So in an environment where interest rates are 1 or 2%, and a 20-year bond pays you 1.5%, 2%. Well, stocks look really, really attractive. They don't need to yield a whole lot. When then you go get a bond that pays 4, 5, 6%, well, that's pretty attractive all of a sudden. And so for me to take more risk in stocks, I need a higher earnings yield. I need them to trade at a lower multiple of that earnings. So the prices need to come down to make them more attractive investments. And that's really all it is. And that's why when rates go down, stocks go up. And when rates go up, stocks tend to go down. We've had a slightly different scenario here where we're trying to fight inflation. So inflation is sort of the bigger evil versus rising rates. So get into the kind of 12 degrees from, all right, people want raised rates because they want inflation to stay down, because they want it to cap pressure on the consumer, because they want them to spend. They're looking for stocks to go up. So all this crazy formula in this wild puzzle we call the stock market has all been priced in. It's all cooked in. Everything that people expect to happen is priced into stocks. So when stocks make or the market makes a visceral move down like it did this morning, or a big move up, that's because news has been revealed that is different than what was priced in. It is different than the expectation. Okay. So 8% inflation, while terrible, would have sent stocks up because we were expecting 8.1%. You see? So 8.3% sent stocks down since we were only expecting 8.1. It's all about the news in relation to the expectation. That's why a stock can have record earnings, but it wasn't as high as the analysts were expecting, and the stock goes down, or can lose money and go way up because they were expecting it to lose much more. So just remember, that's why I don't really believe in trying to forecast things, trying to predict, I think the Fed's going to do this and that. Like, even if you know the news, sometimes you don't know which direction the stock's going to go. You just have to sort of ebb and flow with where the market moves, and just read that as anticipation of things to come. So, Kevin, I appreciate your note there. Absolutely glad to the YouTube lives here, something we started doing here about a month ago. I'm trying to get sort of regular with it and see if the YouTube algorithm, if you're listening, let that algo pick it up and put us out there. But just kind of a way for us to stay connected with you guys and get out and kind of share our thoughts sporadically. These were planned several days in advance, so didn't really know this was going to happen with the CPI number, and a lot of the stocks that looked really attractive 12 hours ago are going to look really suspicious and scary this morning. So I'll probably buy some stuff this morning, heads up. I'll just do some pullback buying. I'm not going to make huge buys. I'm not going to bet tons of money, but some stocks that I like and waiting for a pullback, I'll buy. So like VRTX, we'll see if this thing comes down and touches, 280, 285 area on that trend line. I'll probably take a small position in that with a 2 or 3% stop. NBIX coming down here, might take a small position if it rolls back in with a stop down here below that swing low support. That I'm going to stop right here at, let's see, 101.65. So I can get it down in here and risk 2-3%. I might take a stab at that. In phase pulling back. I'd be interested in buying in phase off a pullback, the 21-day EMA right in there. Again, risking not a lot, putting a stop in here. I'm not going to roll the dice that this is the low. I'm just going to put the odds in my favor. I'm going to find a situation where I can risk 2, 3, maybe 4% to see if I can make 8, 10, 12%. And I know that if I'm risking very little to try to make much more, I can be wrong 3, 4 out of 5 trades and still not take a hit. And that's one of the big advantages to buying pullbacks. It doesn't mean just buy it and keep buying the lower it gets. That's just called bottom fishing. That's just throwing good money after bad, right? That's just, you don't want to like it because it's cheap. You're just going to keep liking it the cheaper it gets. But you're buying areas that show kind of signs of support. It's like for VRTX, that's this big trend line here. We'll buy off that if we get the chance. For in phase, for the most part, it's holding its 21-day EMA here, this blue line. So might buy a pullback to that. The last one's works very, very well. For Northrop, I might be buying anywhere down in here near the low end of support and putting a stop at 475 to risk just a little bit of money. For stock like Altimmune, I'd be looking to buy on a pullback that 21-day EMA, which is around the $19 mark. And again, never risking more than 4, 5, 6% on these, because I want to keep that risk low and give my chance plenty of shots. All right, well, if one of these 3 or 4 trades works, I'll be good and I'll make some money. So that's what I'm looking at today. Hopefully this helps. Again, take it, keep things tight. People often make the mistake of going, well, it's a volatile market. These are bouncing back around. I need to widen my stops, risk more money, give it more room to work. And I think that's the worst thing you can do. You really want to tighten those stops up, because what happens in a volatile market is more of your trades fail. No matter what your system is, no matter what your approach is. If before you were winning on 6, 7, 8 out of 10 trades in a nasty bear market, you may only win on 2, 3, 4 out of 10 trades. That's not fun. So if you're risking more, you're widening your stops. That means you're taking more big hits. So you want to tighten that up. You want to go from risking, 10% on a trade to 4 or 5% on a trade, or going from 20% to 10%. And that way you're kind of pricing in more failure, going, all right, well, I know that maybe only 4 out of 10 of these trades are going to work, but if I'm risking very, very little, and I'm making more when I'm right, I'm still going to be okay, and I can still tread water. So you want to price in that failure and set yourself up where, you only need to be right 2 out of 5 times or 3 out of 10 times to still break even. And that's really the secret. That's what you'll find that most of the pros do. It's all about that risk management game, which is not sexy. It's not fun to talk about, but that's what separates the professionals from the amateurs. So hope this helps today. Good luck in the markets. We're about 7 minutes in the market open. I'm going to pull up my account here and make some adjustments and queue up some orders to buy some of these pullbacks if they hit. I wish you guys the best of luck trading this morning. I do run a service where we do this each and every week. Is Alpha Stocks, Stealth Trades. Let's see what this link is here. And there's a link in the description to sign up for that. We're doing a special $5 offer. You can join. I give my top 3 trade ideas each week. We have a live session for about an hour to hour and a half every single Monday. We review the markets, the big opportunities I'm seeing. We look at your stocks and kind of analyze all those as well. I also send a couple of live picks out via email, SMS each month. Just when I see a big opportunity, you'll get a text message, you'll get an email saying, hey, here's a stock, here's why I like it, full write-up, buy here, stop here, even tell you when to take profits or if we hit a stop on that. So it's a way to kind of help you earn as you learn. Again, it's like a $5 offer, super, super cheap, no-brainer. Click the link in the description below this video if you want to join us on that, and then just shoot a message to me Monday in our live Zoom session. I look forward to seeing you there and hopefully sharing my approach and the stocks I like and making you a better, more agile, more profitable traders. Thank you all again. We'll see you on the next live stream.